Alright, as I promised at the beginning of this year, 2026, I'll be much transparent on every trade that I happen to take, and actually, if there is kind of a loss, if there is kind of a BE hit, I'll be looking forward to do and to cover everything that happens into my trading journey. Now, let me just go straight to the straightforward to what I'm looking forward to explain today. And I go by the name Waweru Kelvin, and I'm a currency trader and a trading coach at RatePulse Market. Now, here is an analysis. If you happen to go through my videos, you will come to across this video where I took a setup on buys on Eurusd. And currently, we can see seems like the price is actually violating this kind of a demand zone here. Now, you need to understand. Now, for this one, I took a small loss. I took a small loss, and here is the explanation. And remember, I had taken some. Let me just go to the forward time frame. I had taken some partials. Yeah, I had taken some partials all the way that at the moment this price was up to this position. So I took some partials. Then later, price happens to go against us, and here is the stop loss now hit. I took a small loss on that. It is quite well. Now, it's called the game. Now, we need to pay much attention to what actually happened, the reason why we took this kind of a stop loss. Now, in general, let me just go straight forward. If you happen to go and watch that video, the link is above here. Yeah, the link is above there. So go and watch that video whereby I took the reason why I was executing this trade. Now, in general, the euro is actually in a good condition whereby the inflation is at 2%, which is actually, let me just go and share. Let me go and show you. Actually, if you go to to go and check on the trading economics on the euro tends to be kinda in a very good condition. The first thing that we check is actually the GDP, gross domestic. Now, there's something you need to understand, that the growth, the GDP of euro is actually in a very good condition, whereby it's showing some kind of expansion, whereby it is like it expanded all the way from 0.1% to 0.3%, which is an expansion. Now, if you check on the inflation rate currently, something else, go and check on the inflation on the euro. You'll come to realize that inflation is actually at 2%, which is telling you that actually the inflation is within or is within the central bank, the European Central Bank inflation target, which is always at 2%. And that is now telling you that our economy is doing very well. Then when the inflation is actually doing very well, the next thing that we should be focusing on is what we call unemployment. If you happen to go and select, if you don't know this kind of a website, just come. It's called Trading Economics. It is very good for the fundamental analysis. Then if you check, let's continue. If you check on the unemployment rate, you'll come to realize that actually euro unemployment rate on the euro is actually decreasing. You can see now, if you check on the bar graph, you can tell it's actually unemployment is actually dropping. And therefore, this is now telling you that when it comes to euro is actually in a very good condition. They are not looking forward to hike the interest rates. Neither are they looking for cutting the interest rates, since the inflation and GDP and unemployment is in a very good condition. And therefore, it gives me a vibe like it's supposed to be a bullish, whereby it's not aggressive bullish. Now, the second thing that you need to understand is what we call on the United States. Actually, in general, let's go and check on the United Kingdom, on the United States. On the United States, that is straightforward, whereby the GDP or the economic growth is actually, here's the data. Let's go and drop on the United States, then check on the GDP. On the GDP, you can tell very well that it is actually expanding, and therefore, knowing that you can see now the GDP in the US advanced and annualized 4.3% in Q3 of 2025. And if you check on the bar graph, you can tell is actually moving to the upside. And that now tells you that the economy for the United States is actually in a very good condition. The second thing that we need to be watching, if you ask the reason why I'm looking for the GDP, is you need to understand whether what kind of a business cycle are we in? Are we in a recession? Are we in a boom, expansion, contraction? You just need to understand. I will be doing much videos to explain this, but let me allow me to do the coverage on this trade. So on the GDP, you can tell that the GDP is actually in a very good expansion. It is actually increasing. The second thing that we need to focus is on what we call the inflation. Now, if we check on the inflation, it's just it's because of this week. This week we had an inflation data coming out, which came out on Tuesday, and you can see that the inflation actually is stagnating at 2%, which is also higher than the interest rates. Which is higher than the Fed inflation target. Then you get to understand that inflation is actually dropping all the way from 3% to 2.7%. Now, once you understand that is actually dropping, the second thing that you need to pay much attention is the inflation is already higher than the Fed inflation target. Bearing that in mind, there's something else before I explain. Let's go and cover what you call unemployment. Once you cover on the unemployment, you'll come to realize that unemployment is actually very high. The labor market is actually softening, doing a lot of things. Now, understand this. The inflation being, the unemployment being very high for the US, it's not good for the US. It's actually worse. It's very worse. But we had the recent data which came out this week, which is already showing some positivity in the labor sector. And that might be the reason why we had that kind of a loss. Now, get this. Once you master that, it is very simple. Get to understand. Once you master that, it is quite very simple. Why am I saying that it is quite simple? It's because the next thing you need to understand is what you call the Fed or the central bank stance. For the euro, we've seen everything is in very good condition. They are neither looking to hike the interest rates or cut the interest rates. Now, on the US, from the previous meeting that Joe Powell, if you want to go and watch, let's just go and check on the interest rates. You can see the video is already provided here. If you happen to go and watch this video, you will come to realize that the Fed or Powell, the Fed chairman Powell, was straightforward and saying that the labor market is actually softening. The labor market is worsening with a high rate of unemployment, and therefore you need to understand whenever you are listening to Powell, whenever there is a speech, you will come to hear him saying with a dual mandate. Remember, they have only two purposes: to keep the inflation under control and also to control the labor sector. For this time round, they are saying that they will be looking to what? To be cutting the interest rates. He was very straightforward that there will be 2 more interest rates cuts in 2026. Therefore, they are looking forward to cut their interest rates. Why are they looking to cut their interest rates? They are looking forward to be cutting their interest rates for them to control the labor market, and therefore they are dovish. Then, once you understand that, this is the thing. After this kind of a projection or this kind of a push to the upside, I was looking for the buys, executed some buys, and then we went up to this position, and then later we had this kind of a stop loss after hitting the BE. Now, get to understand, why did the dollar or the euro dollar keeping dropping? You need to understand, regardless of us having this kind of a demand zone here, regardless of us having that kind of a demand zone there, and thinking, remember this price do not actually move due to the technical analysis. You might be having a very good technical analysis point of interest rates, point of interest, then later you happen to lose the trade. Here's the coverage. Now, here's the thing. If I happen to go in the 1 hour time frame, let me just go, and I wanna go and have on Monday. Here is on Monday how the price actually started. Here is the week. Get to understand, on Monday, the price actually pushed to the upside after Friday having an NFP week, NFP coming way below. Already suggesting that actually the labor market is worsening. But we didn't see any kind of a push to the upside. We had that kind of a projection to the downside, like that kind of a week. Now, on Monday, we woke up early in the morning. Then the price was actually pushing to the upside. Based on the NFP trades which I had already taken, now we moved to the push to the upside. Everybody who is in my group already can testify this. We had this push to the upside. I closed some partials. Then I set some a BE and held 2 trades with a stop loss being below here. Now, if I happen to go to the Forex factory, let me show you something. You need to understand what we call the context in trading. You need to understand the context. Now, when I go to this, if I happen to go to this week, let me just go to not yesterday, but this week, then apply. Then we need to understand. Then let me just filter, and I have US. There's something I want us to cover, and cover the US. Remember, the Fed is looking forward to cut the interest rates. That is now the main agenda. They are looking forward to be cutting the interest rates. And therefore, it is saying that the dollar is actually weak. Regardless of the geopolitical tension, everything, the dollar is actually supposed to be weak. But you need to understand, there is what we call the pricing in of price. There is what we call the expectations of the interest rates. We are looking forward to be cutting the interest rates. Therefore, the dollar is supposed to be very weak. Unfortunately, whatever is leading the Fed to cut the interest rates is the labor market. And therefore, if any data comes out related to labor market and shows some kind of positivity, we might not be having the dollar, or the Fed are looking forward to be cutting the interest rates. So they will be looking forward to be holding the interest rates, which is already a hawkish stuff. And that is now the reason why we had that kind of a drop. Let me show you. On Monday, on Tuesday, we had the CPI coming out at 2.7. Then remember, this 2.7 was actually the forecast, and therefore this being at 2.7 as the inflation, they are no longer looking towards controlling the inflation. The most important right now, what is they are looking forward is to control the unemployment rate, and therefore this was not a major data for them for the pricing. Therefore, we need to look for the data. Look something. We had the core PPI, which didn't pay much attention to that. Also the retail sales, which also came out positive as the dollar, but actually that is not the main agenda. The main agenda was here. We had unemployment claim coming out on Thursday. That is now yesterday. Unemployment claim, you can see that actually they were looking forward the forecast to be at 215K. Unfortunately, that data came out as 198K, which is already below the forecast, and therefore the market was pricing in according to this data. And that is now the reason why we had this projection to the downside. Now, the big question is, do you think the Euro USD will still continue going to the downside? Yes. We might see the price actually pushing below up to this kind of a demand zone of a down here. Yes, we might see the price pushing to this kind of a demand zone. How? This is the explanation. You need to understand, right now the Euro or the Fed is looking forward to be cutting the interest rates, which is also dovish for the USD. But the data which is already pushing them to cut the interest rates, for the data that is pushing them to cut the interest rates is data related to labor, and the labor market right now is showing some kind of a positive vibe whereby the unemployment rate is actually dropping. Let me just get to drop to go and let me just go to the labor, and then let's go for the unemployment rate. You can see that actually the unemployment rate is actually dropping. You can see. Let me show you. even if you were to read, here is the thing. The US unemployment rate edged down to 4.4% in December 2025 from a revised 4.5% in November, which had marked the highest level since October 2021. You can see already it has already started now dropping to the unemployment has already started showing some kind of a positivity, whereby the labor market is starting to do very well, and therefore there is no need of them to cut the interest rates. Therefore, they're looking forward to be holding their interest rates. But remember, having that in mind, you need also to understand that if euro could be very aggressive on hiking the interest rates, we could have seen the price actually moving to the upside. I repeat, if the euro or the European Central Bank, they are very aggressive on hiking the interest rates or controlling the inflation, we could be having this kind of a currency pushing to the upside. But they are no longer looking to hike the interest rates or cut in the interest rates, so they are not aggressive. But for the Fed, they are looking to improve on the unemployment, and therefore the unemployment has already started showing some positivity, and therefore we might see that push of the Euro USD to the downside. Simple as that. And therefore, having that in mind, that is in mind now, you need to understand, for you to be having, we are looking for the bullish Euro USD, but for you to execute those bullish or those buys, you need to focus on what the Fed are looking for and what they are looking, how is the data interpreted. So let's say, for example, next week we shall be having what we call an unemployment claim. If we happen to get that unemployment claim coming out very way higher, showing that the labor market is actually worsening, we might probably see the push all the way from here, wherever the price will be, and then the push all the way maybe up to that position before and pullback, then to the upside. Simple as that. But remember, trading is not all about predicting, it's all about reacting. So if you need to know how to react, you can just reach out to us, and then we can show you the way to interpret and understand what we call the trading context. Right now, the currency the trade that I'm actually holding right now, or I'm looking for a very good trading opportunity, is this trade on the euro, on the USD JPY, bearing in mind that US might be probably now pushing to the upside. Now, for you to understand whether they will be cutting the interest, let's go and check on what the treasury bonds are actually doing. If you go to the US 2-year bond, the US 2-year yield bond yield, here's the thing. If you turn on that, you can see that actually it is pushing to the upside. You can see it is pushing to the upside. Interpreting what? Let me just show you something. On this candlestick, there's this kind of a candlestick here. You can see this candlestick here was as a result of the inflation data which came out on Tuesday. This is inflation. Let me show you something. This inflation, which came out as what? 2.7%. But remember, the context right now, or the main agenda of the United States or the Fed, is not to deal with the inflation, it's to deal with the labor market. And therefore, after this projection to the downside, we have the labor market, which is showing some kind of a positivity, then pushing the bond to the upside, looking suggesting what they might not be looking to cut the interest rates. Same as that. I go by the name Waberu Kelvin, and I'm a currency trader and also trading coach at RatePulse Market. If you need to understand this kind of a content, you can just reach out to us, and then we shall be having you sorted. And also remember, this one is not a financial advice. This is just my opinion. You should, before executing a buy or placing any kind of a position, you should do your own research and come out with a very good decision making. It is quite very simple. I wish you all the best. If you need to understand, you can, if you like this kind of a content, comment, like, and also subscribe. Turn on the notification bell for future content and also market updates. See you guys. Wishing you all the best.